Edition of Elevate Your Grind, brought to you by the Cannabis Lab. I am your host, Todd Rosales, and it is lovely to be here today. We're 1 week away from the Benzinga Capital Conference, and that is if we get this edited and out to you on time. My guests today are going to be presenting at that conference, and I think the topic they're presenting on is going to be a very pertinent one, just because it's one that resonates throughout the industry. It's one that has resonated time and time again on this show, and that's something that we'll touch on in just a little bit. But I made friends with a gentleman from this firm, and unfortunately, he is not the one on the show. He's been on the show before, but he has brought a couple of his friends along with him to replace him. And everybody I meet from this firm has so far been great to us. So I'm excited to have them involved in the Cannabis Lab. I'm excited to have them here on this show. Folks, if you are going to be in attendance at the Benzinga Conference, make sure you check out on Tuesday night. The official Cannabis Lab after party is going to be over at 1-800-LUCKY. I believe it's from 6 to 10 p.m. But if you want to check that out, Google Cannabis Lab Eventbrite. You'll be able to find it there. And of course, you can always find us at www.joinclab.com. All right, let's get into it today. So, my guests today, like I said, they're going to be presenting at Benzinga next week. They're a very integral part of any business that you have, specifically in the cannabis industry, because one of the hardest things to do in this industry is manage your money. So with that being said, please welcome the team from Cherry Bekaert, Joe, Jason, and Chase. Gentlemen, thanks for joining me today, each and every one of you.
It's a pleasure, Todd. Yeah, thank you.
Absolutely. So guys, I'm more recently familiar with Cherry Bekeart, but when I look at your client roster and I look at the people that you work with, you've been in this as long as I have, and you're with some of the major players there. Give me a little bit of a background on the firm itself. Obviously, you guys are CPAs, but is this one of those firms from like the 1820s? Are you guys more new? Tell me about the company.
Yeah, no, great question, and good start. The firm is a 75-year-old entity, very entrepreneurial, much like those that we see in the cannabis industry, especially with the roller coaster rides that these entrepreneurs have been on in the industry. But the firm, we have 1,300 people, really roots along the Atlantic coast, covering some cannabis markets like Massachusetts, Connecticut, down into Florida is a great market for the firm as it is for the industry. We also have offices as far west as California, which is obviously is one of the very mature parts of the industry. The firm grew up as a traditional audit and tax practice, but we have the three guests from Cherry Bekaert today. We're all in the advisory practice and really like to follow the industry and anticipate needs. And many of us have been in the life science and industrial industries for many years and bring some insight from those industries over to this particular niche, if you will, and many of the challenges that we see, pharma companies and others have been through. So we enjoy it. We find the industry to be to present a lot of complex issues, and we like to be a part of those discussions.
When you say advisory firm, so that's almost like a fractional CFO, if you will.
Yeah. We provide a lot of skill sets that accounting organization need. We really think that the entrepreneur is the right group to make the decisions, but they need the right information and the right historical and industry data points to use to make the information. And we create and facilitate the right infrastructure to feed really the C-suite and decision makers the right information. Really, we believe that information is key, and like to accelerate an accounting organization to be more of a friend to the business, more forward thinking rather than dealing with the past, dealing with audits and compliance, although compliance is of utmost importance in the industry, really allowing the accounting department to do all of that and be a little more of a partner to the business.
Very cool. Very cool. Well, let's bring in the other two as well here. Jason, how long you been with Cherry Becker? Tell us a little bit about your background.
Great. Thank you for having us, Todd. So, Jason Menses, I actually joined Cherry Beckert recently. Prior to joining Cherry Beckert, I was actually in the cannabis industry. I was at an MSO as the VP of Internal Audit there, and frankly, what attracted me to Cherry, right? And I know Chase kind of alluded to it a little bit, right? The entrepreneur nature, but we're really the focus on the sector, right? It, Cannabis is limited, right, as everyone knows, by the vendors who are fully committed to it, right? There's those that grew up within cannabis, and there's others that are dipping their toe in. I'd say Cherry is one that is jumped in with both feet, right? And I really appreciated that about joining a firm that was committed to it. What I do is I really work in the risk advisory section, right, where we are focused on controls, processes, and to your earlier comment on, okay, is it really targeting the CFO? Yes, right. CFO manages risk for the company, right, financially, but there's components that are across the business, right? Operations needs to be able to manage compliance, right? It needs to be able to manage cost, and those are some of the areas that we work in within my group, is to really try to enable management to shift, right? So we've been helping our clients shift their mindset from a really reactive tone, which is mainly where the sector is, so now one that is more scale driven, right? And is focused on being more proactive, right? So how do we now not incur the fees, right? And try to fix and patch and put out fires every day, but how do we think about having a true strategy around governance and really prevent some of these issues from coming up in the first place? It all ties into cost, right? Because as these issues and these fires come up, they become very costly, as I'm sure most of your listeners can appreciate. So that's really the area that I focus in. I'll turn it over to Joe for his intro.
Very cool. Joe?
Yeah, thanks. Nice to be here, Todd. So my name is Joe Haehner. I'm a partner here with Cherry Beckert in the advisory practice, and really came into the cannabis space through a friend who became CFO of a major player in the space, and wasn't familiar with the cannabis industry, and called me up one day and said, "Hey, Joe, I need some help in my finance organization," and really, to Jason's point and Chase's point, not so much looking at the past, more being proactive, modeling, cash flow modeling, returns, really being a value player within the organizations, and not so much of a numbers cruncher. The books need to be clean for sure, but you want to use it as a tool to basically manage your company better. And growing up in Europe and Germany specifically, I kind of familiar with that market as well, and kind of try to bring the European perspective and the US perspective here to my clients, to our clients.
Very cool, guys. So how does a firm like Cherry Becker get pulled into the cannabis industry? Because we've seen companies come in and out, some of them jump in with both feet, and as of recent times, you've seen a lot of these payroll companies. They literally just exited the industry last week. We've seen software companies exit the industry after being in it for some time. The industry needs CPAs, and especially ones that have a background with tax. Tax is a huge issue. I'm sure each one of you on several occasions have been on a panel to discuss 280E. How did the firm get into cannabis? Was it a conscious decision where they just said, this is an industry, it's a new one that we believe we can help and also obviously make money off of? Or was it, someone just happened to fall backwards into some cannabis clients and figured it was something that could be replicated?
Yeah, what I would say is building on the life science angle. We do so many life science projects for clients, and for us, that Florida market is particularly strong. And really, the draw came from the needs that some of the MSOs, now MSOs, but the licensees in Florida had. And they were even looking to go public and the like, and that just followed the model that we saw in life science. And for us, and for many, cannabis is a life science, and so we don't necessarily differentiate cannabis from those other companies, and we believe that some of the challenges are similar. There are some unique challenges with the ag product in certain states and the dispensaries being more of a retail setting. For us, it just made a lot of sense with the experience that we have and our entrepreneurial nature. So to just get in and really become an advocate and someone who was in it for the long haul and could provide value throughout the life cycle of a company.
Very cool, guys. Well, it's been great until recently now, and it is no secret right now that the industry is struggling. Every article I read, every LinkedIn post I read, every friend that I talk to, it's a dogfight out there, and resources are slim. The main resource being capital. That's what you guys look at the most within an organization. How healthy is it financially, and how can you stretch that dollar? Tell me some of the things that you guys are seeing right now, because it is getting scary out there for a lot of companies. We talk very, very often, and I think Carson Humiston will be on this show during Benzinga. But I famously quote her all the time. The research that she put out, that in 2021 we raised like $1.5 billion from venture capital firms, and in 2022 that number was less than 300 million. The cash flow or capital into the industry is down 97%. People can't raise money. And then on top of that, and I don't even know, this might be a lot to unpack in a single discussion here, but from what everybody says, and I don't have intimate knowledge of it, we're looking at a debt cliff coming up with all these companies that raise debt 2, 3, 4 years. That's going to start coming due soon. And, you start to see a lot of these companies restructure and refinance that debt. But how many times can you do that before you got to start paying it back? So tell us what you guys are seeing in the industry. Has your job really just become, can we stretch these dollars as far as we possibly can? What cost? Really just bringing everything down to bare bones. What are you guys seeing now?
Yeah, I can chime in there. I think the theme, right, that has to go along with any conversation of stretching the dollar, right, is it's really understanding prioritization, right, and being able to understand the risk. And that's where, right, I mean, and I'm sure Joe and Chase would chime in, right? You got to lead with data. You got to have the honest discussions in every C-suite, right? So I would say our clients are doing that, right? They're taking a good look in the mirror, saying, where do we prioritize? Where do we actually need to fill in some holes? Where can we cut? And how do we adjust accordingly, right? Not only for what's coming, right, but where we're at today. Because I think most organizations have realized that they've hit a hyper growth period in the past 2 years. And now it's, okay, well, what is the new steady course that the organization should be following, right? And what are our metrics that align with those, with that new form? So really prioritization and understanding the risks that you're heading from like an enterprise risk management perspective is critical. And then I'll turn it over to Joe, right? But the budgeting has to follow, right? If organizations have not yet invested in a good amount of time in really understanding their budgets and setting priorities across the organization, they're not going to have the foresight to really outlast what's coming ahead.
Yeah, and to add to that, really, you were talking about investors and raising money, and we have actually a panel coming up next week, and we're gonna have some investors and private equity on that panel to hear from them directly. But it's kind of being realistic in your expectations and in your budget, and when you talk to investors, really, addressing risks upfront and what your strategy is to deal with them. Maybe understand they understand the industry, so they understand the situation, the overall situation. So really leading with a hockey stick growth is probably not the right plan. So it needs to be a little bit more realistic. And most of the investors and organizations we talk to who believe in the space, they just want to understand that you understand the risk of your business, and you have a strategy in place how you want to mitigate it and address it. And and that's where we come in talking about forecasting, budgeting, really modeling cash flow, modeling certain scenarios, being able to have a good idea how to react if certain things happen. That's kind of key for running your business right now, and it's really a mode of focusing on the core value proposition of your organization and really thinking through, okay, where can I make money, and which parts maybe I need to get need to sell or close down over the next couple of weeks or months to weather the storm.
No, Chase, anything to add or?
No, I think that's spot on. That scenario planning that Joe talked about is really benefited a lot of my clients, where especially as the liquidity becomes more costly and more scarce, really kind of knowing the next trigger.
Let me ask you guys a question, right? You have who I would call the public-facing cannabis companies, and obviously those are the publicly traded ones. And we see, we hear about earnings calls, and we can literally see their stock price every day. There's ETF on them. You have Trulieve, you have GTI, Air, Ascend. You guys know the whole bunch, right? But right now, if you look at the grand scheme of cannabis stocks to where they are versus 2018, 2019, they are down significantly. You look at one of the major ETFs that focuses on the industry, MSOS, it is at all-time lows, right? When you have these smaller private companies in the industry that are raising capital and are doing it, they're bootstrapping, they're stretching dollars, and they're growing. I wouldn't say exponentially, but they're growing and they're opening new markets, but they're struggling to raise capital. I believe it's because the public-facing companies, people don't have faith in them because they put money into them, they lent money to them, they bought the stocks, and they've lost their ass. How does a good company in cannabis, whether they're small or large, appeal to an investor when the general public thinks that the industry is not investable based on the public equities that are available?
I would say maybe in before I'll let the smarter guys talk about the finance, right? I think I would make the distinction that it's not investable, right? Because I think the fundamentals out there, right? If you look at the same players that you're mentioning, they've all shown growth. Top line has increased significantly. In most of them, operation cash flow is increasing, right? And in most cases, things are getting better, right? It's just the industry of not the industry, the markets as a whole, right? Is what are they being compared to, right? Without the expectation that regulation is going to happen in the short term, I think investors are turning to other asset classes, right? That may give them a more sure return or a shorter term return, if you will, versus putting in cannabis. So I don't think that the markets it's bad, right? Because they're, to your point on the ones that are private, still have strong fundamentals, right? And they speak on those fundamentals very proudly on how they can grow. I just think, unfortunately, we'll have the biases of the market, right, impacting those large MSOs and ultimately driving everyone's valuation down.
Do you guys think that if the average retail investor had the ability to access some of these cannabis companies, that we probably maybe in a different situation? It's as the average Joe who has a Robinhood account or a Merrill Lynch account, Merrill Edge account, you can't really access the the OTE, right? You can't buy those stocks. I remember back when I had a Merrill Edge account and I called up Merrill, I'm like, hey, I want to buy Trulieve, and they're like, you can't, it's illegal. I'm like, well, they're trading somewhere and I'd like to buy it. So, do you think that if we gave access, and I know this is probably a little bit outside of your purview as CPAs, so I will throw the warning out there that we're dabbling into opinion territory here.
One thing, well, to your point, Todd, one thing that the industry is doing a particularly good job of is around, what all of our clients are considering around ESG, and really the next generation of investors may very well be interested in the industry based on that. Especially the social climate that's out around, in many of the states. I think those companies that are being smart about the environmental also will appeal to quite a few of the next generation of retail investors, especially. So I think you're right. I think generally I would agree with Jason. Many of the companies have good fundamentals that we work with and are looking to get their fundamentals even better. Navigating the political and the tax jurisdictional changes, and not even being able to get safe banking passed this past year, that has created such a strain on the industry. But yeah, the next generation of retail investor, we believe, will be particularly attracted to the industry.
Very cool. Well, let's try to circle out of the doom and gloom, because I don't want to focus on all negative. One of the things that you three do well is you find companies and you help organize them, make it look and feel and smell like an investable company, make it look, feel, and smell like a traditional company. And at the end of the day, that's what investors are familiar with, and that's what they want to see. What are some of the challenges that you've seen in some of these larger companies that you've had to come in and work with? What are a lot of things that you're doing for your clients that may be consistent problems across the board, or just even unique to one or two that we can, change the names to protect the innocents? Give me some stories here.
I think go ahead, Jeff.
Yeah, so I want to make one more comment to the retail investor. I think that's an excellent point. And I think that a lot of the broader market would be interested in participating. And what I also want to share is that there's a lot of opportunity in the market right now as well. So whoever's gonna survive that the next 12, 18 months, they're going to be the driver of the industry. And without any doubt, the US market and European market, for that matter, these are the largest markets in the world. And I think we're all on the same page that we feel like this is a question of time. And if you can, hunker down and manage your financials so that you get through the next 12, 18 months, and maybe even partner or merge with other players in that space so that you can create a critical mass and market reach in the US. You can, these companies, they will be the players going forward.
So we have survival of the fittest right now.
I think that the two concepts tie together, right? Like fittest being key. Right. I think that organizations that are not using this time right now to become fit,
to be healthy and slim down.
It to some extent, right? I would say in the slim down, we're seeing it all over, right? It's not just cannabis, right? Look at the tech layoffs, right? They overhired. Right? They overhired and now they have to cut down to see what's reasonable. I think cannabis is doing the same, right? So it's no different from hyper growth industries. It's more around, okay, we went through a period of hyper growth for 2 years. Now let's reset, right? Let's get fit and let's figure out what the right approach is for that. So in my area, right, what my clients are doing is looking really into compliance, right? And saying, okay, we have compliance requirements from, the ones that are public, with the SEC or the OSC, right? Or financial institutions may have compliance requirements. And then you have your license requirements as well, state by state, right? So it's taking a second look at those, really asking the hard questions of, okay, how much are we really spending on compliance? We grew so much, we hired, 20 people to do compliance. Do we need 20, right? How much personnel do we actually need to have there? How many support groups do we have? The amount of clients that I have that have various layers upon layers of people doing redundant work where it may not be efficient, is significant, right? So they're asking those questions, right? Do we need to have a inventory control and operations, a compliance, and an internal audit group all looking at the same risk? Is there a way to reprioritize those? How do we make those groups more efficient? Do we need to bring in a stronger technology set, right, to reduce some of the costs? Do we bring in ways of collaborating, or simply do we just outsource it, right, and figure out a way to get it done more effectively? Those discussions are probably what I'm more familiar with at all my clients, right? Is really becoming more effective with the resources you have, right? To making sure that you are fit for purpose.
Chase, you and you guys kind of talked about cash flow modeling and projections and things of that nature. I remember early on in the industry, you even mentioned hockey stick growth. It was absolutely ridiculous, some of the growth that you would see in a lot of these financial models. And the industry, it still is projected to be giant. The problem that I foresee is, revenue growth might hockey stick, but will profitability go along with it, just because of all the tax regulations and the capital that's needed to fuel growth? Where do you see yourself really getting involved here? Do you just come in, look at numbers, and sometimes be like, hey, this is the top line revenue might be right, but you're forgetting all these X, Y, and Z factors in it? How do you guys really work on these cash flow models and these capital projections?
Yeah. And Joe, I can talk about the cost side. Maybe you can talk about the revenue side. But in general, I like Jason's analogy to the tech industry. If you look at Meta and the year of efficiency that Mark Zuckerberg is leading in that company, we do see our clients getting more and more efficient and getting, rationalizing process, rationalizing positions, rationalizing cost. And unfortunately, it may not be as reflective in margins currently because of the pricing pressures coming from tax, coming from the illicit market in California or elsewhere, right? So, I will say that our focus is largely on that cost side and looking for those redundancies and looking for opportunities. And as it relates to the pricing, Joe, I'll let you kind of talk about the revenue side, the top line side.
Yeah, thanks. So, I mean, for the top line side, it's really there's really no secret sauce, or you gotta stay. You gotta. Now is the time to revisit your operating model and to revisit. Okay, what are product lines you have? Do you have to be in all these areas? How much do you spend on that? What's the overall market look like? Sometimes it just doesn't make sense to enter a new state and try to generate revenue if the cost of doing that, compliance, is just outperforming that opportunity. And then think about strategic partnerships and other players in the space, and to see if you can combine and create efficiencies, and you don't need two accounting departments to run a combined company and grow revenue unorganically. If your business model is solid, then we feel like you're in a good position to find the right partners to do that.
I think even in just to chime in, because I think that there's a project that Chase and Joe work with, right? And maybe it's so basic in nature that they don't realize how important it is in cannabis, right? But I think in general, right? When we look at tech and the similarities of what they're doing to get fit, I think it's also fair to call out the differences, right, in cannabis. And it's like cannabis doesn't have a 30-person FP&A department, right, that has the top of the line tools and best analysis to be able to tell you exactly how much to cut and when, right? So almost building those foundational steps of what is the current FP&A process, right? How did you come up with a bottoms up budget for your organization? How realistic is that budget, right? A lot of my clients are frankly using the same number that they think they're supposed to have, right? It's a wild guess in terms of how they manage finances versus what I'm used to seeing, at least at a Fortune 500, right? It's just a different process, and in getting clients to be able to see that, it's eye-opening, right? In terms of, okay, this is the process that we should follow so that then we can get fit, right? And then make those decisions both on the cost and the revenue side.
Let me ask, I'm going to be cynical here, and let me ask the question, and maybe we're dabbling back into the opinion territory here. Is it efficiency and getting fit, or is it a result of arrogance and confidence over a fake economy? And when I say that, is no secret, in 2020, the world shut down. People were not operating, revenues were not coming in. And the tech industry, who we keep comparing ourselves to, boomed. The cannabis industry also boomed. And when I say the economy was fake, it was because there were dollars being pumped into it that otherwise would not have been pumped into it. And with tech companies taking massive advantage of people needing to work remotely, they were increasing revenues and had more cash on hand. Cannabis was also deemed essential, and more people had expendable income to spend on weed. Do you think there are any symptoms of what we're going through now that have to do with the fact that these companies were making more money quicker than they probably should have or expected to, and thought that that was going to last beyond the pandemic? Because it seems once a lot of these programs were done, and the extra money that was coming into folks that needed it at the time and were getting it is no longer there, that now everybody has to trim their belt again. Why, and I don't need to ask you guys, this is more opinion for the general public, but why the fuck could they not see this coming, right? So do you guys believe that the overinflation of our economy during the pandemic has to do with a lot of what we're seeing now? Or is this too much of a bombshell topic for anyone to talk? Yeah. So
I would say, I mean, not that we don't know, right? No one knows the answer to that. But I think you got to be able to give some credit to this. Like, you look at the financials during 22, right? Pandemic has been over. Most of the organizations are still showing growth, a healthy double-digit growth, right? So that has to speak good. It has merit, right? So I don't know that it's something that is strictly overinflated, right? Did that have an effect, right, in 2020 and potentially 21? Potentially, right? But I think 22 would normalize that, and the projections that most companies have for 23 is to continue seeing growth. So I would probably disagree with saying that it was overinflated in the sector.
okay, I'm all for differences of opinions here. I would say, maybe the smart people know, but I think there's a lot of people who just thought it was gonna last forever, unfortunately. Let's move on from this topic, and let's talk a little bit about, the future. We are where we are. Cannabis is slimming down. Things are getting better. Companies are starting to run more efficiently. Let's go each one of you at one point. We'll go Chase, Joe, Jason. What excites you about the future of the industry?
Yeah, I think the first, it will be such a refresher for cannabis to be treated like other capitalist businesses, if you will. I mean, even some of the fundamentals about some of the vendors who will work with the industry, not just banks, which everyone knows about, but also, let's just, in our world, some of the accounting software systems that are fundamental to inventory management. It's difficult to navigate that within larger companies. That will be so refreshing about introducing the right options. And I think the labor pool will really become more available to the cannabis companies, and they'll recognize the growth that they've achieved. I think there's great opportunity. I think that other really mainstream food and beverage companies will be interested in what the industry has done so far, and I think that I like I've mentioned this again, the social and environmental approaches that some of the companies are taking, and I think that will be something that's recognized very heavily by the next generation, the millennial generation, and viewed very favorably. So just a lot of momentum, I think, with once some of the obstacles we've talked about around legislation is out of the way, and we're more mainstream of an industry, if you will.
Very cool. Joe?
Yeah, I would echo what Chase was saying and adding, look, the last number I saw was that by 2028 in the US, this is going to be a $50+ billion industry. And this is just amazing. And I want to be where the growth is. And I think there's so many interesting applications for these products and for the industry. It's getting through the next 12 to 18 months. Hopefully we can get here together again soon and talk about the SAFE Act and how this all got issued. And this is going to be behind us, which will be a great milestone. And then there's the international application, and which we haven't even talked about much here, which is a great opportunity for everybody in the world is looking to the US. What is the US doing? And there will be a trigger effect into other economies coming from the US. So hopefully we can we see the right decisions made. And feel very bullish about Jason,
it. One of the things I heard recently, you said you're from Germany, is that Germany is actually looking to go recreationally federally legal soon, and they say that they might actually present something before 420. A, did I actually read that correctly? And B, is that something you think is going to happen?
I think we have to have a separate podcast on that. I'm getting pretty emotional about this because it's a kind of similar situation. To your question, there is a draft out there now. Given the Germany being part of the European Union, there's only so much they can do without basically getting approval by the European Union, and that's kind of the main challenge right now, because the European Union is waiting for Germany, and Germany is basically waiting for the European Union. And then you have all the other countries who already announced, especially on the eastern side of Europe, that they say, hey, whatever Germany is coming out with as a solution, we're going to apply one-on-one in our legislation. So yeah, I mean, I could see that Germany might be moving faster actually than the US the end.
Jason, what are you looking forward to?
I'm still very much still bullish, man. I am very much excited for the next catalyst. I think that there will be a next event, whether it's a change in administration, whether it's an announcement from this current administration, or another life event that will rebound the industry again, and the hype will return, right? So right now I'm patient, but I think that catalyst is coming in the shorter term, hopefully.
Very cool, guys. Well, gentlemen, we do have to get this wrapped up. I thank you for coming here. I look forward to seeing each and every one of you at the Benzinga Conference next week. I've been trying to run this show and look at the calendar. Do you guys know what day or time your panel is off the top of your head? If not, we can try to put it into the link once we publish the episode. Anybody?
Joe? Wednesday evening, correct, Joe? Or Wednesday late afternoon?
That's correct. Yeah, 5:30 on Wednesday. Perfect. And we can also probably share the link, Todd.
Very cool. So 5:30 on Wednesday with Benzinga. Everybody, if you're going to be at the event, definitely check it out. Any parting words that you gentlemen would like to leave us with?
look forward to Miami. Hope to see as many of you there as possible.
Awesome.
Thank you.
Yeah, I'd say reach out, right? If you have any questions, if there's any way we can help, we're a resource. We're really looking to help in the industry.
Cool. Joe?
Yeah, I would echo, use us as a resource. Please reach out. We really have been doing this for a while. We have seen quite a bit, and we are absolutely hands-on. So there's no red tape or anything. We get into it and, tell you what's up and what we're seeing.
Beautiful. Well, thank you, gentlemen. I appreciate your time. And thank you to everybody at home. This has been another episode of Elevate Your Grind. Of course, if you missed any part of this episode, or if you'd like to see the 200 plus episodes we have, you can always check those out at www.youtube.com/elevate your grind. Folks, Tuesday night after the Benzinga Conference will be the official C-Lab after party. These gentlemen might be here if you want to pick their brain. But of course, check them out at the Benzinga Capital Conference next week. We'll be live from the conference show floor. Come see us. Come say hi. I do not know the booth number yet, but we'll certainly let you know once we have it, folks. This has been another episode of Elevate Your Grind. We'll see you next week at the conference.